We're under an hour now till the opening bell on Wall Street. For a look at market technicals, let's bring in Katie Stockton, founder and managing partner at Fairlead Strategies. You've gotten this pretty darn right over time. I'm glad.
Thank you.
That I keep inviting you back because if we were explaining how wrong you'd been, it wouldn't be nearly as much fun.
No, not for me.
S&P had some breakouts recently that you talked about. Significant.
Really a major breakout. I would call it the third major breakout since the bull market began in 2009. So to me, breakouts, and you can kind of see it right here.
Wow,
that's
you
your
know
breakout.
How to do it, but I don't.
This was a 2016 breakout, and here was your 2012 breakout. Breakouts, as you see, do tend to see positive follow-through. We're already at new all-time highs. That's rarely a bad thing for the market. There's not a lot of signs of exhaustion, only short-term in nature, if any. And the breakout that we saw here actually projected to about 3280. So what that assumes is that this trajectory will be maintained from that corrective low. So that gets us up here
to 3280,
which would be about 3280. And that's about 4.5% above current levels.
And that's not a long-term objective.
That would be
either,
more intermediate term. It used to be long-term, now intermediate term in nature. So first half of
what do we got to get through first? Is there something?
There's no more hurdles left.
Really?
Importantly, I would actually highlight on the Russell 2000.
Oh, yeah, Russell 2000 is confirming this, right?
That's right. So that had resistance still left on the chart, right? So the 2018 high here, which is around 1742, is left there still as resistance. But if you can see here, we just saw a nice trading range breakout. That breakout bodes well for that intermediate term upside follow through. Long-term momentum's on the verge of turning positive for the Russell, which is the small cap benchmark. So that targeted resistance level is about 6.5% above current levels. That, of course, bodes well for the S&P 500 reaching that same level. It also aligns nicely with what we could see in terms of the January effect. So we've had really pretty pronounced underperformance by small caps versus large caps. Last year, we had the same kind of scenario. You get that sort of tax loss selling phenomenon, and then you get a phase of outperformance. This is a ratio of the Russell to the S&P 500. You get a phase of outperformance typically January into early February.
So the complaint has been it hasn't been broad enough. This is broadening things out?
You know, the breadth has been there all along, so I'm not sure what people are talking about when they say the breadth.
They're talking about FANG, which you also want to talk about.
Right. And,
but we want FANG to do well, which it has now, and that's breaking out too?
FANG can obviously help the major indices with such a big footprint. And even the laggards within FANG are now really participating in the momentum here. We have Google, not necessarily a laggard, but really a fresh breakout on the chart and very long-term in nature. You can see that here. It was a wide long-term trading range. That was about $250 in width, which if you project from the breakout point, it gets it to about $1,500.